In the currency quadrant, taking a look at the June Japanese yen, which after a 3% recovery measured from the low close on April 30th to the high close on May 3rd, has now fallen 5 of the last 6 sessions, including today. By today's New York cash close, the yen was down just short of 1/4%. Also by the New York close, the low today, 64.36, which was down about a full 1/4%, and the high, 64.66, was only up more than 0.2%. It was not an active session in terms of initial volume, and that's, again, not official volume, just so you know that. The resumption of this trend lower is what happened today, which is now 2.2% lower, measured from that high close on May 3rd that I just mentioned, and that means something. It means the Bank of Japan, which has repeatedly voiced concerns about its falling currency, has some tough choices to make. With several rounds of intervention over the last week or so seemingly not working, Japan's fiscal problems are playing out in the FX market. On the one hand, a weaker yen helps Japanese exporters in the global market, but it puts pressure on households on the other hand by increasing import costs and driving inflation. Japan's economy relies heavily on both imports and exports, and a stable yen is the best possible situation. Japan may also stabilize the yen by raising rates, but its massive debt burden will become more expensive to finance if they do that. There's no good choices for the Bank of Japan at this point. Subsequently, with no decision actually being made, the yen is resuming its recent weakness. Now, today's move lower is clearly a yen weakness story. It's not a dollar strength story, because the dollar was weaker today against the British pound and the euro, which are the other two main components when you're looking at currency indexes. That's part of the reason individual currencies are a better way to see what's actually going on, which currencies are weak and which ones are strong, versus any index, and the yen has been very weak recently, including today.